Happy Friday, traders. It is 8:02 a.m. Chicago time on the 9th of February, 2018. Thanks for joining me. A very busy week this week, clearly. Markets whipping around, continued to whip around into the close yesterday. Love this volatility. Overall, this is what we're looking for, although it is a little too erratic, but volatility has a tendency to collapse pretty quickly back to close to where it was, so that's what we're looking for. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market position this morning looks to me like it's allocating to risk across the board. We have pretty good moves in the Russell and the Nasdaq. The Nasdaq's up 53 points or 0.83% already, followed by the Russell 11.5 points up or 0.83%. The S&P is up 15.5 points. Remember when 15.5 points was a day and a half's worth of range? Now we're doing that before the market even opens. That's 0.63%. The Dow's up 100 points, 0.44%. The losers, the laggards today are crude oil. Crude oil's giving OPEC producers, I guess, some ulcers. It dropped from, 66 to 60 this week, something like that. I don't have a long-term crude chart in front of me, but it's down another 1%. It's trading at $60.58. RBOB gasoline is down 0.92%, trading at $1.74. And the rest are all just safety assets. The Euro Stoxx 50, interestingly, is down 15 points, and the DAX is down 20 points, which is basically flat for that product. That's what things look like currently. As far as what we're expecting today that might impact us, we did get some several releases from the UK overnight, China PPI as well. But this morning at 10 o'clock, we're looking for U.S. wholesale inventories final for December, a consensus 0.2%, prior 0.2%, and then the calendar's relatively clear. We have a speaker out of the BOE, nothing really significant, although I'm sure he wouldn't appreciate that comment that he's not significant. But I'm not seeing anything on the calendar here that's earth-shattering. Even the wholesale inventories, it's a final number. Those don't have as much of an impact as other numbers. Before we move on to our review, I want to remind you that it is like Friday. It is like Friday, so please hit the thumbs up button as you continue to watch the broadcast. It does help me out. By the way, schools are closed here in Chicago today. We're getting 2 feet of snow. It's about 60 centimeters of snow. So they decided to keep kids at home. Hopefully, I'm working from home, so I'm hoping that my internet connection is steady, that a tree branch doesn't fall over a cable somewhere. So here's what we expected yesterday. Okay, this is a pre-market, of course. Coming into yesterday, the primary plan was for the market to likely test below the prior low, but oh, no, the primary plan, I was going to say, that doesn't look right. The primary plan, and I encourage you to go back and look at yesterday's Trader Bite. You can find it on my YouTube channel, youtube.com/futurestrader71. And you can take a look at why the primary scenario and the very high probability play for the day was for 2637. When we were in our Trader Bite, we were trading the mid 2680 handle, 2685 or so. The expectation is to look for any area to get short. Look for the push down. Look for the test of the prior day's low, potential pop, and then continuation down to 26.37. Took a while, but worked out almost picture perfect. They're not always like that. But yesterday was very easy to, was relatively easy for me to play. It's with the bigger picture trend. The pullback was pretty healthy, but unable to hold the prior point of control. The market closed in a neutral extreme. The expectation is for continuation down and a test of the impulse low, which is exactly what we got. The secondary scenario was for the market to test up, come down, test the prior low, advertise prices lower to get buyers, and when buyers come in, the expectation is for a turn to 27.13 and then 31.50 extended. 31.50 is a very important over-under line. Here's what actually happened. Now, because I'm zoomed out, this chart's going to seem a little noisy. Let's kill some of this stuff here. Hang on. Oh. Actually, let's... All right. So this is the pattern I was talking about. This is day session only. So we come down and we become impulsive down here. Consolidate, that's expected. We got about a midpoint pullback. That was Wednesday. And now we've worked the continuation. So we've taken out the prior low. 25.80.50 is a major point of control, MC point of control. That's what we hit to the tick overnight. And as I tweeted yesterday, I'm expecting it to bounce back from there. Let me clean this up. This is a holy mess here. All right. Okay, and let's take out the tags. All right. So that's what we accomplished yesterday. We ended up dropping right away on the open. We opened and we tested up 2 points. That's it, 2 points. Would have been much nicer to get value low from the prior day, get the point of control of this entire area, and then sell off. That would have been a much more comfortable short. So it started out the day watching it drop. Let me show you how that looks like on my execution chart here. So as we go back in time, there's the open. So if you look at the right edge of your screen, and there we are. We just have a nice opening swing. There's the opening swing right there. Opening swing high at 2601.75 and then low of 92.50. So now we've seen where the initial sellers and buyers have stepped in. And then from there, it looks like it's just unable to get through the midpoint of the day, but there's nothing for me to do here except this is my first clue right here, impulse down, 12.75 points, a 3 standard deviation move, right? It's about 2 standard deviations for this volatility. And then I'm looking for mid. Oh, shoot. Sorry, I screwed that up. I'm looking for a midpoint pullback. And there's the opportunity right there. This is the first chance to get in here, backed up by this zipper right there. Stop is above 27.96, entries around 27.91. And I'm looking for continuation. Boom, stop. Okay. And then we get a second opportunity here. Right there. Stop. Hang on. This doesn't look right. Because that's not what happened. I apologize. Kind of messy today. My charts are not the way that they're normally set up because I'm having to battle with the fact that there's a lot of volatility, and also I was here for the reopen, so I needed to continue to watch my charts. There was only one pullback and one stop there. Now it makes sense. Sorry about that. Yeah, when I said the second stop, I was like, nah, that's not what happened. Here. There it is. Right here. That's the only clean entry that I saw. And then this is the impulse right here. And I'm looking for continuation as the market's unable. We're unable to push up 2 points. Unable to push up into value, the prior value. Unable to push up into the prior, the MC point of control. And then we get the continuation down. Now we've got the test down below the prior day's low. And then the market falls back in, comes all the way to entry back here, falls back in. And this is one of the risks that we have. We could have scenario 2 where it tests below the prior day's low, finds buyers down here, pushes through, pulls back to the mid, and continues higher. In that case, we're looking at 27.12 as the scenario 2 first target. And so what it does is it tests higher, and it's unable to hang on to those higher prices. And we continue down. And so finally it gives up. Once it falls below the prior day's low the second time, it gives up, and then we get the bigger moves as we start to work our way down to the 2637. Right there. So 2637 achieved. Right there. And then from there, like I said on Twitter, it's gravy from there. What I didn't expect is the market would drop another, I don't know, 50 points or something, 40 points. Did not expect that to happen, but that's what we've got these days. So anyway, that's a little bit drawn out. Let's take a look at what we did overnight. The overnight session had outstanding volume. 539,000 traded in the overnight session. Yeah, sorry, my son is using the latrine next to my office. Like I said, they're out of school. So we have an overnight session that has a lot of volume. Okay, so one standard deviation of the overnight volume is 300,000. 300,000 with about 120,000 being the point of control, or the most common overnight volume. Today we're running about 5 times the normal volume. 5 times the normal volume. What's so special about today? It is not an option expiration Friday. That's next Friday, the 16th. It's not rollover. This is all built into the market behavior right now. We have a range of 37 points yet again. The overnight ranges have been about 37, I think 37, 41, 37 now for the last few days. And the market explored the full range of the profile. And even though we have a point of control, we have what looks like a high volume node here in HVN. Really what this is saying is that both sides are active. Both sides are active and are exploring the full range. So what we don't have in the overnight session is consensus. The market is seeking very, very actively, seeking balance, but is not finding it down here. So as it pushes up, it becomes, to many participants, becomes rich, and it becomes an opportunity to sell. And as it pushes down, it becomes cheap, and it's an opportunity to buy. And there's no agreement and consensus on value. So volatility carried over into the European, into the Asian sessions, and so on. And we're seeing it here. So this today, we're expecting a continuation of the larger swing opening. We're expecting a continuation of the thinner depth as we've had all week, and so on. So the overnight session is not giving us anything to work off of, except that once we did get down into the 2580 area, the MC point of control, and I'll show you where that comes from in a second. Once we got down there, we got a pretty good pop into the close that pulled back. We closed at 2590, and then when we reopened, we gapped up 5 points, and the market has not been able to come back down and retest that low in the entire overnight session. Again, we're pushing up against the biggest balance range point of control at 2580.50, and as I commented yesterday, I'm expecting this area to provide some support and a bounce, a spot for a bounce from a market profile perspective. So let me look at let's look at my flex chart. Don't worry about all these lines on the right. They're not, they're for the flex levels. But if we look at the flex chart, here's this is the kind of the big picture chart that I use. Here's the area of concern right here. So from this range here, from October 20th till November 20th, we were in a tight range. We were completely imbalanced. You can see that profile is completely Gaussian. And then from there, what we did is we stair-stepped up. We didn't really balance out much from there. So this area here is the last place where we had good, strong balance, and we've come right back to it. And the point of control is listed right here. The point of control of this area is 2580 quarter, and that's your low of the overnight session. We pushed through it yesterday by a few points, a handful of points, 2577, so about 3.5 points. But overall, we're looking to bounce from here. We're trading at 2606.5, so about 26 points above currently, which is 2 rotations in the product right now. But just make sure you look at the bigger picture, and you can see from the bigger picture that we've pushed down, bounced, continued, and we continued right into this range here. So yesterday on the reopen, I was stalking longs. I was only stalking longs. I'm looking for it to push higher, and the best it could do, at least while I was here, is 2605 from 2695. And I just shut down. It's just too thin. But this is an area that I'm expecting, if we follow standard volume profile principles or behavior principles, I'm expecting a bounce from here, from this high volume node here, which is created by this MC. I'm expecting a bit of a struggle and a bounce, and if we do return here, I'm expecting a bit of a struggle, a push, and then eventually a bounce from here. This is the normal behavior for this product when it does come into a major balance zone. So this morning, I'm looking for, let's change this. This morning, I'm looking for a little response, looking for the market to drop, probably an open rejection reverse, OTD type open, push back down, and then I'm looking for an impulse up. Okay, so that's what I'm calling for, or I'm looking for, an impulse up, and then we start to move our way back into the prior day's point of control. This is a fairly, believe it or not, a fairly balanced profile here with a clear low volume node right here at 2610, and there's another low volume node at about 2658, 2657, and that becomes the key area we trade to today. I'm expecting us to spend most of our day in here today, unless of course there's a lot of money sitting on the sidelines, which there was, at least before this thing dropped, and that money gets deployed at these prices, and then we'll see it push through that 2657, 58, and then we start to move back into the 2690 area, which gives us about 100 points of range for the day. Not expecting it to go that far, but that's the primary scenario for today, is that the market becomes responsive and it pulls back into 2630, a 2630 point of control. And if it does push through it trades that 2657, 58 that we talked about yesterday as the key retest area. We retested it back here, and we hold steady within this bracket right here. Okay, and that bracket is from 2610 till 2657. Okay, with the main target being 2630. All right, so that's if we get frantic. Now, I'm not looking for it to get up here. The probability of a range expansion on the way up is relatively low. Range expansion on the way down, pretty good. Range expansion on the way up, pretty low. So I'm not expecting it to make it through from down here to the MC point of control, 2690. But, you know, who knows? This thing is very volatile. The VIX was trending up on the close yesterday. So who knows what we'll see. That's the primary idea. Now, if we immediately push up and then fail and get an impulse down, and we start to break through 2610 here, again, after a retest higher, I'm looking for the pullback to short, and then I'm looking for 2580, 50. Again, the overnight low is the key target. And then once we break the 2580, I'm looking for it to get down into the 2565 before the bounce back into the range. I expect us in either scenario to close inside of yesterday's range. I expect us to go into balance between today and Monday. Okay, that's a lot to cover, I know. Again, please hit the like button as you head out. A little bit of confusion at the start of the video here with the chart, but I hope you get the point. Again, it's Friday. Don't go into the weekend with a hole in your pocket. Make sure you don't get emotional about your trading. Be as objective as you can. Don't ignore your emotions. That's not possible. But acknowledge that your emotions don't guide you in this business. They guide you in other areas of life. They've helped you survive for thousands of years and your ancestors, but they're not something you want to rely on for trading. Good luck.